I'm Candido Diaz, aka Candid Mortgage Guy, alongside with Maddie D, aka Princess Jasmine today. And we're here to talk about the ABCs.
Stop saying Maddie D.
Oh, sorry, Princess Jasmine and I are ready to talk about the ABCs. You ready, Jasmine?
Yes.
Oh, perfect. A is for asset.
A is for asset.
An asset is anything of value that a person has, like bank statements, stocks, or 401ks. B is for buyer's market. It's a B. This is when the housing market favors the buyers. C is for credit report. Credit report is a detailed report of a person's credit history.
D is for delinquency.
Delinquency is simply the failure to make payments on time. E is for equity. The equity is simply the difference between the value and how much you actually owe for the mortgage. F is for fair market value.
F is for fair market value.
This is simply the price or value of the property that it would sell for. G is for gross income. This is simply your income before any taxes or expenses are taken out. H is for homeowner's insurance. Homeowner's insurance is simply an insurance to protect your home from any disasters or accidents that may occur. I is for interest rate.
I is for interest rate.
This tells you how high the cost of borrowing is as a percentage. J is for joint liability. This is simply a liability that is shared by multiple people. K is for keys.
K is for keys.
These are going to get you into your brand new house. M is for maturity date. Maturity date is simply the date by which the loan must be paid by. N is for note.
N is for no.
That's simply the terms of the debt and the promise to repay it. O is for owner financing. Owner financing is simply when the seller or owner finances part of or all of the financing. P is for PITI. PITI is an acronym for principal, interest, taxes, and insurance. This is your payment. Q is for qualifying ratios.
Q is for condo ratios.
Qualifying ratios are basically used to ensure whether a person qualifies for a mortgage or not.
R is for refinance.
This is simply when you pay off the old loan with proceeds of a new loan, usually to take cash out or get a better interest rate.
S is for seller's market.
The seller's market is simply when the housing conditions or market conditions favor the sellers. This is what we're in right now.
T is for toll.
This is simply the number of years that it takes to pay off a loan. U is for underwriter. This is the person that reviews and gives final approval for the loan. Usually they work for the lender. V is for VA loan. A VA loan is for veterans or military, and it typically is little to no down payment. W is for W-2, and a W-2 is an end of the year statement that tells you how much that you made for the year and how much taxes were withheld. Usually a lender will ask for 2 years of W-2s. X stands for X marks the spot. This simply represents where you're going to have to sign for all the paperwork on closing day when closing on your home. Y is for year-end statement. Year-end statement simply shows how much interest was paid over the given year. Z stands for zip code.
Z is for Zipcodes.
This is your postal delivery area. It helps you with your mail. These were the ABCs of mortgages. Thanks for watching another episode of the Candid Truth. I'm Candido Diaz, aka the Candid Mortgage Guy, along with Maddie D, aka Princess Jasmine today. Thanks for watching.